Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everybody, welcome back to an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I'm your host, Mike Leon. Brian here is a seasoned tax attorney with over 25 years of experience helping business owners and self-employed professionals resolve serious IRS problems, audits, large tax debts, including representation before the U.S. Tax Court. He's based out in Tampa, and he's been serving clients nationwide with a focus on federal tax controversies and protecting clients' rights during the collection process. And in today's episode, we're going to be talking about how waiting can be one of the most expensive mistakes you can make when you're dealing with the IRS. So, Brian, good to see you as always. Let's start at this high level here. Someone owes the IRS. How soon do penalties and interest start adding up for them?
Hey, Mike, thanks for having me. They can actually start adding up, so to speak, in a current year that you're in. An example would be this. If an individual, say self-employed, is supposed to make estimated quarterly tax deposits on their income, personal 1040 income, you have a certain time frame where you're supposed to make the deposit within 30 days of the end of the previous quarter. And when you go to file your tax return the next April 15th, which could be in some cases a year after the first deposit was due, you can already be assessed some type of a late payment penalty. So they can happen in the current year. But for most people, it generally is going to happen by April 15th. And by that, what it means is many people say to me, I'm on extension. I have until October 15th to file. I say, that's great. But how much do you think you're going to owe? Well, I've already got the return done. I just haven't filed it yet. It shows I owe whatever, $50,000. I say, well, keep in mind the tax is due April 15th, even if you have an extension to file till October 15th. So there's no incentive to wait to file necessarily, because the penalty is going to start right then and there. And keep in mind too, when it comes to interest on an IRS debt, interest is always based upon the unpaid tax and penalty. We talked about it in a previous podcast. The IRS charges interest on the penalty. Isn't that nice? So if you have a penalty and if you have a past due tax, interest is accruing based upon how much that is. And people say to me, what's the interest rate? Well, it was running around 8% for the last year. Now it's down around 7%, but it's compound interest like a credit card. So keep in mind, it can be very substantial.
It's good to know about those calculations on the interest part. Let's talk about the differences in these type of penalties between an individual versus a business. Can you kind of explain both?
Well, for most of the businesses that we deal with, they're like a subchapter S corporation or an LLC, what they call a flow-through or pass-through corporation, which means all the monies that might be owed by the business flow through to the individual business owner or owners. So if we have a business that has some monies owed, it's usually in the form of some type of a penalty, such as failing to file a corporate return timely, failing to file informational returns timely, and so forth. But a C Corp that would owe tax, it's much the same way. There's different parameters for C Corps. We don't do a lot of that work because you're talking companies that are, revenue streams of $500 million or more a year. We generally work with much smaller businesses. In fact, the IRS's definition of a small business is receivables under $20 million a year. And that's really the bulk of our clients as far as business owners. But it's really much the same thing. You can start having monies owed even within the same calendar year, even before the return's filed.
Brian, in a previous episode, we talked about how much the IRS relies on payroll tax debt specifically. Are the penalties different or more aggressive in that case?
Absolutely. In fact, the IRS used to call payroll tax debt, payroll tax penalties, if you will, they used to call it the 100% tax. People say, what does that mean? It means basically in a blink of an eye, you can owe double of what the unpaid payroll tax deposits are. But I guess it's a kinder, gentler IRS now, so they don't use that harsh term. There's some terms they don't use anymore. We can go to those. But basically, with payroll tax, within a couple of years, it's about double. The system is set up to be very aggressive in collecting payroll tax deposits. So I tell people, if you start falling behind, the time to contact our office isn't when you have somebody coming to your place of business, or for that matter, even anything beyond the initial notice. Call us right away, because we have different ideas that may be able to assist you in going down that road any further.
Good to know the IRS is not as harsh as it used to be, Brian.
Yeah.
So Well, let's talk about that then. So, in terms of penalties and interest, does the IRS ever reduce them? Do they remove them? And if so, can you explain how they do it?
Well, I'm gonna take a half a step back before I answer that. And one of the things we hear from people a lot is when they call and say, "I got this tax bill. It's 6 years old. It's a lot of money. It's in the tens of thousands, hundreds of thousands, whatever it may be. And my God, I mean, the tax itself was only so much. There's all these fines and fees and so forth." And I say, look, when you come to IRS debt, there's basically three components. There's tax, penalty, and interest. There's not fees and fines and service charges and all that. It's not like a cell phone bill or a cable TV bill that's got 55 different things listed. It's pretty straightforward on three components. But in terms of assisting people with the penalty, we will make a request for penalty abatement in every instance, and we'll do that at the appropriate time. I mean, sometimes there's a timing issue with it. I had a client recently came in and they had a six-figure tax bill, and of course it was very clear on its face how much was penalty. And they said, "Well, I want to see about getting this penalty addressed before we take another step." And I said, "Listen, you've owed this tax for 5 or 6 years." I said, "I think since it's something that's somewhat discretionary on the part of the IRS, let's start working towards a more formal resolution before we start looking at penalty abatement. There's a timing issue." And the guy says, "Well, if they're going to waive it, why can't we get that figured out right now?" I said, "Well, just think back to the day when you were a teenager. If your dad was mad at you about something and you wanted to borrow the car that Saturday night, you weren't going to ask your dad when he was mad at you. Okay, you were going to wait till maybe you mowed the lawn on Saturday morning and washed his car or something, and then asked your dad if you could borrow the car." Okay, there's a timing issue. Same thing with penalty abatement. Sometimes it's right out of the gate, we'll ask for it. Other times it's on the back end, but it's always something that we're going to pursue for our clients. And also keep in mind with interest, they charge interest on the penalty. So if the penalty is waived, whether it's a portion of it or all of it, there will be a corresponding amount of interest. But specific to interest, the IRS is not going to modify interest. It's a fixed rate. It's configured by the IRS, and interest is never modifiable.
So let me stay on penalties and interest for a second. What is something that you have seen that people get wrong about how fast the IRS can make these penalties and interests make the balance almost skyrocket? I'm assuming it's if they ignore notices or things like that. Like, what are some things that people often get wrong about this?
Well, sometimes what happens is people move. I mean, we're a transient society. People will move and they'll say, "Look, I got this letter and I didn't even know I had an issue." Well, it turns out when they filed their return, it wasn't done correctly. Maybe they left some income off. Maybe they took a deduction that they weren't entitled to. Maybe they had a bad tax return preparer or something like that. And the IRS sent a notice and so forth. They said, "I didn't get anything for 3 years." I said, "Well, your address is 123 Elm Street. How long have you been there?" "Well, I've been there for a year." I said, "Well, where did you live when you filed your return?" "I lived over Pine Street or whatever." I say, "Well, did you do a separate change of address notice with the IRS, or did your tax return have your new address?" He said, "Well, actually, my accountant used my old address." I said, "Listen, they sent notices to that old address, a bunch of them, but they're generally not going to forward. IRS letters don't generally have that yellow forwarding sticker. So it's possible that you've been accruing penalty and interest on a debt you weren't even aware of." And he said, "Well, if I'd have known it back then, I would have just paid it because it's clear on its face. I left this income off, or I took a deduction I wasn't entitled to." Well, so you have situations where it's kind of that perfect storm of where uh, they're wrong, the client's wrong, but they would have paid it. So in those cases, we'll take a look at penalty abatement, but the IRS is pretty strict about that. If you have different address, something's changed, they send notices, but if you don't get it, that's on the taxpayer.
Yeah. That's why you want to answer those notices so you can avoid a nightmare on Elm
Well, you
Street.
also want to keep your address updated because people say, "I changed my address at the post office." Well, the IRS doesn't
Right.
work off the post office address change. I mean, you have to either have it on the most recent filed tax return, your correct address, or if it turns out that you moved right after you filed or something, then you have to go to the IRS website and there's a particular form, I'll tell you, Form 8822, change of address. You have to fill it out and mail it in. And people say, "Well, where do I email it? How do I send it in?" I said, "They don't take email. The IRS doesn't use email." Well, in very limited circumstances, they do. I'm not going to say they never use email. But when you get these IRS notices, you don't see an email address on there. Now, they're moving into a way where they have a certain kind of download where you can get a code and so forth. And I deferred a lot of that to the staff on some of the technical part of it. But basically, there's a way you can do it that way. But the IRS doesn't use email. They're old school in a lot of respects. So it's always important to keep your address correct with these guys.
Yeah. Brian, if somebody can't pay their debt in full, what's the smartest way you would recommend for them right now to kind of slow down all of these penalties and interest that are starting to be levied on them?
Well, that's the thing. The IRS, and we get this a lot of times from people that say, listen, we want you to just get them to block or freeze the interest on this, okay, or the penalty. And penalties generally will cap out after about 2 years. So if you have a tax debt that's 3, 4, 5, 6 years old, the penalties have already maxed out. They're charging interest on it, but the penalties have maxed out. So people say, well, I want you to get them to stop charging interest. And I say, believe me, if I could, I would. I said, but at the same time, think about it. If you owe certain types of other debts, I mean, generally they're going to continue to charge interest. So I'm not excusing the IRS. All I'm saying is by federal law, they're going to continue to charge. And we talked previous podcast. In some cases, you have a situation if somebody ends up in a non-collectible status, maybe they get offer in compromise, maybe they have a situation where the amount of time the IRS has left to collect has expired. There's in many instances we've had clients who literally stood by and watched balances drop off simply for various reasons. So can't stop the interest doesn't always mean you're going to have to pay it. Okay, just depends.
So Brian, someone's listening to this right now. They're worried about the balance, the debt that's owed. It's growing out of control. What's the best place for them to start?
Call our office. We'll give you a free consultation. We'll talk with you about your situation. As I say, we've been doing this a long time. We know what questions to ask to really get a good handle on where your situation is as best we can. And then in some cases, we have to dig a little bit deeper, get different transcripts or documents from the IRS. And certainly when people come in, if they retain us, and we have a lot of clients that retain us virtually since we do work nationwide, once we have the authorization to represent you, we'll obtain certain different documents directly from the IRS, and then we'll be able to boil it down to find out exactly where you stand and where this is all coming from. And at that point, make the appropriate recommendation. It's kind of difficult just on an initial call or just at the first blush to tell people what exactly is going to work best. And I use an analogy with people. They'll say, I say, imagine if you woke up some morning not expecting to have some type of issue, medical issue, and your leg's all swollen and it's discolored and you can't stand on it. You don't have the faintest idea what in the world's happened. And you reach over and you grab your phone, you call your doctor, you get the doctor on the phone and say, Doc, my leg's discolored, I can't stand on it. What's going on? Well, what's the doctor going to say? He's going to say, well, come on in. I want to examine you. I want to run some tests. I want to look at medical history. All these. The person says, well, just tell me, Doc, how are you going to fix my leg? How are you going to cure me? Doc says, I don't know yet. We have to look into it. We have to figure out what is causing it and what the best solution is. And in some cases, that's what happens with us. We tell people we can't give you the ultimate answer. I can tell you this, though. Once we get involved in the case, we'll tell you exactly where you stand and why the IRS has that perspective, whether they're right or wrong. And then at that point, we'll say this is what we think is going to be the best solution for you, because that's ultimately our goal in every case, is to provide our clients with the best solution for their particular case.
Brian, thank you as always for the time and insights on this. We truly appreciate it.
Thank you, Mike. Appreciate it.
And thanks to everybody for listening to another episode of the IRS Debt and Audit Podcast. Look, if IRS penalties and interest, it's making your tax debt feel unmanageable, you just heard what Brian said. Don't wait another day. Visit his team over at tampataxrelief.com to schedule a consultation today. Do me a favor, like, subscribe, leave us a review and comment, or share this episode with someone who needs to hear it. As always, I'm Mike Leon. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.